let's get straight to our next management, that of BEML. Remember, the past quarter's numbers a little bit disappointing, though margins have been a bit of a pleasant surprise. We have with us Mr. Shantanu Roy, the chairman and MD of the company, who joins us. Hi, Mr. Roy. Good morning, and thanks a lot for joining in. Well, let's get a couple of basic numbers first out of the way. Earlier, you were guiding for around 20% growth for the fiscal. As of the half-year mark, you're more or less flattish. So do you stick to that guidance, that revenue growth guidance that you gave? And also on margins, your gross margins are holding firm above that 50% odd mark. What is the margin guidance we should be working with for the second half of this year?
Good morning, Nigel.
Morning.
Let me talk about the positives that happened in the first quarter. The first quarter saw the unveiling of the Vande Bharat sleeper train. The first quarter also saw BEML getting the order for the high-speed train. The first quarter also saw BEML commencing the assembly and commissioning of the first indigenously manufactured electric rope shovel at Northern Coalfields site. These were the positives. Yes, sales was flat, but EBITDA has been on the growth path. As far as the EBITDA is concerned, the margins, I would still say that 100 basis point growth over last year's number is definitely on the cards, and we are well on our way to achieve it. As far as the sales is concerned, you see, sales, let me talk about the order book, and then I will go to the sales. The order book, as on 1st of November, is around 12,255 crores. We booked around 2,000 crores of orders till October in 24-25. And in the coming, in this month itself, I'm sure the order book we are expecting to grow by further at least 30% over the current numbers. In the current year, the order book that we are aiming at, another 35% over the current numbers by March. So that will be a healthy order book. Coming to the execution part, we have around 3,000 crores of orders which we can execute in the current year. So that sees us through for the 10% growth. Absolutely not a challenge. The challenge is getting some more orders, which we are expecting from the mining and construction sector in the coming 2 months, which will be able to execute by the end of this financial year. So my guidance for the sales year-on-year growth still remains around 20%.
Okay, all right. And you said that 35%, so just to reconfirm the numbers, sir, the revenue growth will be 20%, margins will improve by 100 basis points in comparison to last year, and by the end of this year, the order book will be 35% higher than current levels, which means that you should end the year with an order book of roughly around 18.
Order book, you're right. The orders that we are going to get, I said two things, it's in two parts.
Right.
In this month, we are expecting further orders, which will increase our order book by 30% over the coming levels. Okay. And after that, from December to March, we are expecting some more orders, which will increase the current order book by 35%. So overall, there will be a growth of around 65% further order inflow in the coming 4 months. And after we execute, so we'll be left with around 17,000, 18,000 crores. You are spot on. Absolutely.
Right. So we were just doing those back of the envelope calculations itself. On mining as well, you said that it will continue to be your largest contributor to the top line. You expected faster growth in defense and rail. FY24, the contribution from rail increased around 38%, and defense could do only 20%. By the end of this year, how do you expect your revenue mix to look like? And if you could break down your order book as well in terms of a mix, that would give us a sense into what the future revenue mix would look like.
First, let me talk about the order book breakdown. Order book, the year-end order book will be around 50% from rail and metro, 30% from defense, aerospace and maritime, and 20% will be from mining. As far as the revenue is concerned, last year railway did pretty well. This year actually railway will not be able to do that much because the orders that we are receiving, the orders that we received even last year in August, there is a gestation period. So the orders, the execution will start primarily from 25-26. So this year again it will be led by mining. Defense, we have a pretty good order book. So defense is expected to contribute at least 30% to the top line this year. Railway will be around 20% and mining will be around 50%. So this trend is going to change. If you look at the order book trend, so this trend will change maybe from financial year 25-26 and 26-27 it will see a marked change in the trend of the vertical which is contributing to the top line.
Mr. Roy, good morning. As far as railways are concerned, are we, earlier a lot of the money was being spent by the railways on railway sort of infrastructure. Then it moved to train sets and coaches themselves. Now we've heard from some of the other companies who work in that space that the focus is once again swinging back to infra, building out the infra away from coaches and train sets. Is that something you're seeing as well, and is that going to continue? Just wanted your thoughts.
You see, there has to be a balance between infra and the rolling stock. And the rolling stock market requirement is going to be huge. We are already looking at the Vande Bharat. We are already looking at different variants of the Vande Bharat, the Amrit Metro. The metro per se for all the tier 1 cities and tier 2 cities, there is a huge opportunity. At least 14,000 to 15,000 crore in the coming 2 to 3 years from the metro itself. If I talk about commuter rail rolling stock, some of the tenders that we were expecting this year and which now will not happen this year. For example, the 100 train sets of the push-pull aluminium train, which the order size itself is around 30,000 crores. Then we have the MRVC EMU local trains. Order size is around 40,000 crores. So all these have been pushed back, apart from certain track machines, maintenance vehicles. So around 75,000 crores of orders have been pushed back to the next year. So once these fructify and these start getting executed, definitely the share of the rolling stock for the rail and for the metro will definitely go up. And yes, the focus has to be on infra. We have to improve the infra. Absolutely no doubt about it. But at the same time, we'll need the rolling stock also to operate on those routes.
Yes. Okay, very quickly, sir, with regard to that 30,000 crore tender for aluminium push-pull trains, give us some more color on that. By when do we see this open up? By when do you see execution? And what part of this could BEML get?
You see, this tender was already announced by the railway and sometime in March it was discharged.
Yes.
So we expect that in the current financial year, maybe in the last quarter, this tender should again be announced. And this is the 100 train sets. The push-pull is a normal train which has a locomotive. And the car body, the coaches, are not self-propelled or propulsion-driven, unlike the Vande Bharat or unlike the metro trains. The metro and Vande Bharat do not have a locomotive, and there is a set of blocks. For example, in Vande Bharat, if it's a 16-coach train, so every 4 coaches, 2 are motored coaches or powered coaches, and 2 are non-powered coaches. But in a push-pull train, the normal regular train, there is a locomotive, and there are all the coaches are none of the coaches are powered. All the coaches are hauled by the locomotive. So this will be one difference. Second is this will also get the aluminum technology in the country for the first time, and which will prepare us for the next wave or next level of the aluminum trains in the country. Third is here the share of BEML that I can foresee should be around 70%, considering the kind of partnership that we are envisaging. So I think I have answered all your questions.
Just one quick clarification. You said by the end of this year, your order book would be close to around 18,000 crores. That's below your earlier, guided range itself. Your earlier guided range was 20,000 to 30,000 crores. Now this is below the lower level as well.
Yes.
Is that correct?
Yes. Yes.
Okay.
And that is because some of the orders that we were expecting to be finalized in the current year, they will be pushed back to the next financial year. For
So
example, the
in
Mumbai
light
line
of-
45,
right. So
456.
in light of that, could you give us a sense of the order
Mumbai line,
inflows that you-
line 456. Sorry, let me complete, Nigel.
Yes, please.
For example, the line 456 order for the rolling stock, which is valued at around 5,000 crores. So we anticipate that this is not going to be finalized in the current financial year, and this will go into the next year. So
All right.
if we had, if that had been finalized, we would have definitely crossed 20,000 crores.
Mr. Gupta, thank you very much for joining us, and hopefully some of these will come on track. Appreciate you joining us here on CNBC TV 18. Good luck.